everybody. Thank you for joining us to the Don't Forget About Forgiveness discussion of the next phase of the PPP process. With me, I have Dika Carr from M&T Bank. I have Aaron Wade, who's with us at Miller Musmar CPAs, and he's going to be working on addressing all the Q&As and moderating. And I want to thank the Reston Chamber of Commerce and Strategic Capital Advisors. And let's start. So one of the things we always do, because this is one of those rules out there, is there's a nice legal disclaimer that this is for informational and educational purposes only. Everything we're giving you is going to be the best and latest, but at the same time, we are dealing with a very fluid environment, and I'll explain why later on in the slides. So we have to do this legal disclaimer. So you worked hard, and man, did we go through a lovely 2 weeks, 3 weeks of work to get all this PPP funding. And now you got the money and questions start popping up. What do I do now? When do I have time to spend the money? How do I track the money? What will I need to provide to the SBA to get that lovely coveted loan forgiveness? We're going to cover that. I've taken the EIDL loan and I've gotten the grant now because it came in pretty late after the fact. Most people actually submitted the EIDL loan, then submitted for the PPP, and they got the PPP money before they got the EIDL loan. And any questions on that, we can address it because there's been some very interesting changes with the EIDL loan. What happens if you are misusing the funds? And what is misusing the funds? We're going to cover that. So the first thing we have is this lovely CFR, which is really the nexus, the law that all of this PPP process is tied to. And I want you to pay attention to the last 3 words at the header. These are interim final rules. So I don't know how you can have final and interim added together, but what that really means is that this code section in the CFR is not finalized. The government may and leaves the door open basically for them to add more rules. So for us, we're going to be covering section 1106. So for you attorneys and legal people and technical people, that's where you're going to get the law that explains all of the things that I'm covering from today. Because this is going to be a moving target due to the interim rule, the resources that we always recommend people seek is not what people are posting, but actually going to the website at the bottom, which is regulations.gov. That will give you the latest, greatest, and most up-to-date information on what's happening with loan forgiveness, okay? So if you are one of those individuals that wants to get it from the source, that's the place to go. So you got the money, congratulations. Now you got a 52-day countdown that starts literally when you get the money from your bank. And that's the amount for you where you have to go through and start looking at figuring out your payroll costs, rent payments, utility payments. And we're going to do a deep dive in all of these 3 categories to really explain it. But you have 8 weeks to start tracking and, most importantly, spending the money in a way that'll get you the loan forgiveness component. So the PPP loan forgiveness is written as you can see here in very clear terms, which is you can get 100% of the loan forgiven if you spend the money within 8 weeks of receipt of the loan fund proceeds, and you're going to be using this to cover your payroll costs and other costs that are described below, provided that you have 75% of the money must be used to cover payroll costs. And that's really the big hurdle. But like anything else that's issued, there's complications that we're going to explain so that you can understand how that's determined, and try to run a couple of scenarios with the time that we have to run you through an example that shows how this is calculated so you can really understand the loan forgiveness. And obviously other certain conditions need to be met. So how do you apply for loan forgiveness? Well, right now, the banks are probably going to be the ones that are going to make the initial determination. And they're the ones that are going to put the information together, and then they're going to go through and determine if you're a candidate for forgiveness and how much. Not all banks, if not, frankly, the majority of banks have received too much guidance on this. So you have to sort of stay tuned for this to come through. But what we've been seeing is that the banks are going to be the ones that are going to make the initial assessment, sort of package the deal, and then submit it to the SBA for final approval and or potential audit in the future. Because you have to keep in mind, there's so much money out that the SBA is going to be looking under the hood and checking to make sure that the applications have been, for forgiveness that is, have been processed properly. If you are someone who's very organized, this should not be a complicated exercise. It's a time-consuming exercise, but is really not complicated to document these things. All right, so first thing you have to look at is 3 major issues that you really want to try to meet to get the maximum or equivalent to 100% of loan forgiveness. Number 1, try to maintain the staffing levels during this 8-week period. This is not something where everything is going to be allowed, where you're going to hire someone at the last minute per se, and I'm going to do a big dive into this particular line item. Number 2 should be pretty straightforward. Spend the money based on what's allowed. That's how you're going to get the forgiveness. Don't try to take a square peg and put it in a round hole. Really work through the process, and we'll explain what is allowed under all of the 3 categories that we mentioned before. Use 75% of the money for payroll. If you start using more than 25% for non-payroll related items, you're now risking not getting full loan forgiveness and getting that watered down. You know, a simple example is if I got $50,000, take 75% of that, that's $37,500 that I should be using to cover my payroll costs, okay, during that 8-week period. And that way, I'll be able to go through and get the maximum loan forgiveness. So part of the loan forgiveness that you have is to determine the FTE, which is full-time equivalent, i.e. the headcount that you have for your staff. If you are a company that has both full-time and part-time employees, there's a rule of thumb we're recommending people use, which is 30 hours a week equals 1 full-time person. And therefore, if you have someone working 15 hours a week and another person working 15 hours a week, so you have 30 hours, that equals 1 FTE, 0.5 and 0.5. If anybody's salaried, i.e. they're not earning money on an hourly basis, and you're classifying them as full-time, you've got full-time and you're ready to go, okay? Now, the FTE count is one of the things that we have where the government is going to give you multiple choices to use to decide which FTE number you're going to use. And we're going to cover this in the next slide. And just so you know, for all of you here, we also are broadcasting live on Facebook. So if somebody is not registered or having a hard time, you can tell them to go to Facebook, they'll find us. So the first thing you're going to use is a period either between February 15th through June 30th, 2019 as your benchmark, or January and February, 2 months of 2020 as your average FTE count. And we're recommending our clients do both so they can figure out which number is the more advantageous one to use. Again, we're accountants, so we get into the weeds here a little bit. This is how you're going to go through and do the calculation. You have 100% of the loan, and you're going to determine your write-off. You're going to be doing a calculation 8 weeks following the loan closing and determine your head count. Now, that's the numerator. Now you need to compare it to either one of those 2 windows that we have highlighted for you. One is the February 15th through June 30th, 2019 monthly average FTE number. And then 2 is the, the one from January and February of 2020, okay? So let's come up with an example because this is important. And the reason why the FTE count is very important, if your FTE count drops, this will start diluting your ability to receive loan forgiveness. So for example, if a company has 20 FTEs from February through June 2019 and 18 FTEs from January and February, 2 months in 2020, you should be using which one? Okay, think about it. You should be using the one that is the January and February 2020 because it'll be a lower number. The lower your denominator, the easier it is for you to achieve that higher percentage to get to the 75% or greater headcount. So keep that in mind. There's also a couple of very interesting but very important points you need to remember where there is room for quote unquote redemption. The third bullet point is very important. If you have reductions in staff occurring between February 15th, 2020 and April 26, 2020, okay, that will not be considered as part of the reduction in the loan forgiveness amount, as long as you reverse them by June 30th, 2020. So this is a very important planning tool you need to consider if you are in the situation where you are losing staff and you think you can make it up by June 30th. You know, restaurants right now, they may have gotten the PPP funding, but I'm pretty sure they're not fully staffed. And they most likely will not be fully staffed because the governor already said this month is a write-off. So May is already a write-off. If you got the funds on April 27th, this month, you're not going to bring back staff and have them sit in the restaurant to do nothing. So you're going to be trying to do what? You're going to probably try to hire them later on. So this might give you a little bit of a breathing window to be able to address bringing the staff back, because you reduce them from February to April, and as long as you bring them back before June 30th, God willing, cross our fingers, we'll be able to go through and hopefully still give you relief that you need when it comes to the lending process, okay? Important note, which is at the bottom, if you are in those industries, which is typically medical practices or government contractors, and you have people that are making over $100,000, just like what you did with the PPP loan application, you cannot pay these people more money because you want to get to the 75% threshold and think it's allowable. Everybody's going to be capped at the $100,000 a year salary, which, if you're looking at it mathematically, would be $8,333.33 per month as the maximum forgivable amount for those individuals that are making that much money, okay? So one of the things that we have is issue of bringing people to come back because the staff are on unemployment. And in this example, you're ready to bring them back and the staff are telling you, I don't want to come back. Think about it. In Virginia, you have $973 a week in unemployment coming into somebody if they qualify until July 2020. Now you're a practice, and we've already had this with the medical practices, and you're trying to get your staff to come back, and the staff are declining your rehire. And you're like, wait a minute, I'm going to catch 22. I'm trying to bring the staff back so I can get the loan relief, and at the same time, my staff are telling me they don't want to come back. Right now, what we're advising our clients is obviously try to convince them to come back. If they don't want to come back, try to find somebody else. And if you're failing at these two, document their rejection of the offer so that maybe you'll be able to get loan forgiveness because the staff are rejecting the rehire process. This is not black and white, but this is what we're recommending for our clients so you don't forfeit your benefit. Technically, according to Virginia Employment Commission, an employee should never reject an employment for re-employment to bring them off of unemployment benefits. Again, how you would go about addressing that is questionable and frankly not in the scope of this presentation, but something for you to be aware of. Okay, so we get into the details of FTE. Now the next step that we have is what is included, and I'm going to go through these categories for you. Number one is salaries and wages, just like when we did the PPP application. It's gross salary, which includes commission, tips, paid vacation, and again, capped at $100,000 salary. This should be very straightforward. In essence, maintain your payroll as it goes. Don't sit there and try to stuff things into the payroll. Just run your regular payroll for you and your staff. Employer, state, and local taxes, we had an issue with that where people were trying to add the wrong taxes. Think of this as SUTA, or state unemployment tax. Some states have disability insurance, but typically it is your state unemployment tax, you know, that you would pay on behalf of your staff. Typically in the first quarter, you max it out anyway, so you may not have that much to claim. Employer share of health insurance. The government defines health insurance under the rule, not just from the standpoint of health insurance, but dental, vision, disability, all of the things that we have listed here are included as part of the health insurance coverage, as long as it is the money that comes out of the employer's pocket, not what you take from the staff and remit to the vendor. It is the money that you as the employer are paying out of your pocket. The interesting part for me that I like is the second line, which is retirement plans. Any employer match on a 401k plan, on a profit sharing plan, on a defined contribution, i.e. a pension plan, are all tax deductible. And therefore, you have the ability as an employer to claim all of these and be able to use that as part of your loan forgiveness. So this is very good for people that provide really rich benefits for their staff, where this is going to be piggybacked on top of their gross wages, okay? Please keep in mind this component of payroll costs omits the employer FICA and Medicare. We had a lot of issues with that, even with some of the payroll companies. That is not part of this package. Do not include it as part of your payroll costs, okay? All right, so let's go through a couple of loan forgiveness scenarios and see if we can shed some more light on this. So here we have Maria's Eye Care, and she received $70,000 on April the 10th, 2020. Clock starts April the 10th, 2020. And she has 8 weeks to meet the loan forgiveness. Here's how she spent the money on payroll costs. And then she spent $4,000 a month on a combination of rent and utilities. And we'll cover rent and utilities later on. So she has, if you go through and do the math basically, and you add up the first line, which is payroll costs, that adds up to $62,000. So 62,000 divided by $70,000 means that she already exceeded the 75%, and she actually spent 88% of her proceeds on payroll. That is 100% allowable. And then the rest of the money, which is $8,000, she used to cover rent. Perfect scenario where someone will qualify for the entire $70,000 to be forgiven. Okay, scenario number 2. Benny's Metal Works, he received $44,000 on April the 12th, and they have, again, 8 weeks to do the loan forgiveness. And he has full-time staff of 3 per month during the 8-week window, and down from his 5 that he had before, because he started out with a higher number. And he ended up paying payroll, and you can see he started with $6,000 in payroll in week 1, brought it down to $4,000, went all the way across, and then paid rent and utilities for the 2 months, and it's $5,000 a piece. Okay, so he got a loan of $44,000. He used $34,000 of it to cover his payroll costs. That gets him over the 75% threshold, but he had a drop in his FTE count. And if you go through and you look at his FTE count, he, out of 5 staff, he only had 3, which means he kept his FTE count at 60%. And that means that even though he spent the money on payroll and he used up 75% or greater of that payroll, the loan forgiveness will be diluted to $26,400. And he actually is going to have to repay the proceeds that he did not qualify for, which is $17,600, back to the government. And in this scenario, keep in mind that it's not really still a bad deal, because the $17,600, he's going to have a 6-month deferral. The interest that's accruing is at 1%, and there's roughly 18 months he can pay the $17,600 back to the federal government. So it's not the best scenario, but we have people that are not going to be able to meet the head count because they literally can't bring all their staff back, like the examples I gave you. Don't fret, because it's just a diluted amount, okay? And again, if he had fit into the blackout window of February 15th through April 26th, and he's able to bring the staff back by June 30th, 2020, and it does not have to be the same staff, it's an FTE count, not a roll call here, he might still be able to qualify for full loan forgiveness if he's able to do it before June 30th, 2020. And hopefully that would be the potential opportunity to allow the individual not to have to go through and worry about that. okay? So I'm going to be giving you guys some takeaways, hopefully that'll help you. I'm calling it a checklist, but really think of it as best practices that you need to have, okay? So number one, try to do as best as you can to maintain your staffing levels, either based on the February through June 30th, 2019 amounts, or the January through February average. And ideally, you want to pick the lower of the two because, like I explained, the denominator should be lower, and that way you can meet the 75% or higher the FTE count. If you're able to do that, that's great. If you're running into a problem and you can't get the count up by the 8-week window, don't get too nervous because you have one last bite at the apple, which is trying to get everybody back by June 30th, 2020, okay? If you're able to do that, then you're sort of able to make yourself whole, okay? Try to maintain the payroll levels. Again, not an easy thing. You can go through and reduce the staff compensation, but don't reduce it beyond 25% if you really want to get the loan forgiveness. Once you start doing a haircut above 25% of somebody's pay, you're going to go through and most likely not qualify for any loan forgiveness, okay? And again, anything you counter by June 30th would be fantastic. And what you want to make sure is that up to $100,000, we had people that are trying to do it themselves and they completely forgot about the $100,000 cap. And they were all excited that they're going to get the loan forgiveness. And we had to sort of explain to them that they did the math wrong. So please keep those things in mind. The PPP loan, please use it for the permitted uses. I can't tell you how many questions I got about these things, and it's kind of a little bit funny, and that's why I'm smiling, because people are trying to take all kinds of expenses and put it into permitted use. Payroll is payroll. Subcontractors are not your employees. You cannot pay subcontractors and claim this as part of your payroll calculations. The health care benefits that I explained about are all allowable as long as you're going to pay the employer side. If you pay rent, that's fine. Rent is allowable. It's going to be only for 2 months. Don't talk to your landlord and tell me that you want to try to do 3 months of rent during this window. You're only going to do 2 months, or in essence, 8 weeks. If you own your own property, the interest on the mortgage will be allowed as long as the bills were in existence before February 15th, 2020. Don't run and buy a property and think you're going to get the government to pay for it. The same thing applies for utilities. If you have cell phones are considered utilities, phone systems are considered utilities, internet's considered utilities, but the proviso is that you've been paying it since February 15th, 2020. What's not clear is if you have utility bills that you may be behind on, and you want to use those to make yourself whole. I think what we're going to end up settling on is you're going to get a deduction for 2 months of whatever you pay, regardless whether it's, you know, April or May or June, or March and April. As long as it's a 2-month combination, I think you're going to be okay. So please keep those in mind. But again, unless you can time travel, don't incur anything new because the government says it should have been in existence as of February 15th, 2020. Okay, so here's the utility breakdown. Like I said, is try to maximize it. A lot of people did not know what fits into utilities, so we tried to really expand upon this. And just like what you see, internet access is utility. Telephones, including cell phones, are a utility. Water, gas, and electricity, obviously, are utilities. We had someone wanting to put their car expenses there. No, that is not a utility. And you got to have evidence. What is evidence? 2 things, basically. You're going to have the bill itself, and you want to have proof that you made the payment. And if you're paying it by check, the canceled check and the bank statement. If you're using a bill payment service, you're going to have to be able to show the bill payment receipt. Okay? So again, I reiterate, don't prepay and don't try to go through and game the system. Just do 2 months of these expenses. This is the smaller part of your challenge. The biggest challenge is what I covered in the beginning, which is for you to cover 75% or greater of the payroll, or 75% or greater to cover payroll. If you have that issue really addressed, you're going to be okay. If you start not meeting that and think the utilities are going to make up the difference, that's not the right way to tip the scale. So focus on payroll costs first, try to get to the 75% or higher, try to address the FTE count, and then focus on the utilities, rent, and mortgage components that come second. Okay, so again, this is literally what I just said, use 75% of the payroll cost. Do not go through and try to stuff it beyond what it can be used for, i.e. 2 months worth of expenditures, not a year's worth, and not 3 months or 4 months worth, okay? And track this correctly. If you do this and you focus on the 75% rule, you're gonna be fine from the standpoint of getting what you need, okay? Spend the loan proceeds. The rules say that you can incur the payroll costs, okay, or spend them. We're trying to be as safe as possible, and what we're telling our clients is just have proof that you spent the money, because there's sections in the rules that say spend the proceeds. So we're going to be a little bit conservative here and recommend that you go through and spend the money versus just get the bills and do what we do as accrual basis. Okay? All right. Aaron, we're ready for some questions.
All right, there's some really good ones in here. We touched on this, but in terms of using loan proceeds to prepay expenses, there's no guidance out yet, as we understand, but is that something that if they're in kind of a middling position between being able to make up the rest of the funds, maybe that's something they could do?
So thank you, Aaron. When you go through and you're prepaying expenses, what we are sticking to is, does this fit in a 2-month window? If you're going to go through, for example, and you got your Comcast bill and you got internet April, May, and June, and you're trying to say, you know what, I'll pay April, I'll pay May, but you know what, I'll prepay June, and that'll include my costs. We think that's going to be disallowed. Okay. What you want to be able to do is to continue to cover an 8-week block of time and do not transgress that.
All right. Is there any impact on the availability of loan forgiveness for taking out an EIDL grant?
Yes. So if you got an EIDL grant, which was supposed to be $10,000 per person and has been brought down to $1,000 per FTE, and let's assume you got the entire 10,000, you had enough staff, that will be deducted from the PPP loan forgiveness. So if you got $50,000 and you meet all the requirements and you're supposed to get a $50,000 loan forgiveness, you're still going to have to pay back the $10,000 that you got from the EIDL grant. Okay, it is not allowed because the government justifiably looks at this as double dipping. Okay, and we don't want to double dip. So you got two benefits. One of those benefits is going to have to come off, and you're going to have to give that back.
All right. Now, if they actually hire new employees in the first few months of 2020. Do funds spent on payroll for those new employees count towards the target percentage, or are those not considered?
Yes. So the beginning of the year is an interesting thing. If you hire somebody in January and February, they'll count towards your FTE count that I talked about, which is one of the options. Either use the 19 or the 2020 version, and then obviously their payroll will, in the 8-week window when you get the money, will be allowable.
Okay, and I think this is this may not be a gray area, but in terms of what's considered a payroll cost, is that just health insurance and medical costs, things like that, or does that include life insurance as well?
So life insurance is not part of it. Okay, disability insurance is. So you're allowed to claim ADD, which is accidental death and dismemberment. And your health insurance includes, like I stated before, health insurance cost, vision, dental, all of the employer paid portion. Now, if you are a self-employed individual and you have a Schedule C, which I didn't talk about, okay, And there's a reason why. And you are the only person working in your company. You're basically going to have a much easier you have to achieve, because as long as you filled out your PPP application correctly and you use the proceeds, you're going to basically qualify, because you don't have to do payroll. You don't have to really do much with the money that you got to be able to meet those standards.
Okay. And in terms of profitability, is there any, if the business is still making money, does that impact the calculation of the forgiveness at all?
So that has zero impact. And actually, Aaron, we've gotten so many questions about this where people are like, I'm doing okay, I'm making money. It's not a sin to make money. The government has one big objective: keep people from getting unemployment benefits, keep them on the employer's payroll, and retain your staff. If you do that, you're meeting the essence and the purpose of the Paycheck Prevention Program, okay? You're keeping the people off of the unemployment lines. And that's really the primary objective. So yeah, by all means, if you're gonna make money, you're gonna be fine. Don't have any sort of guilt on this.
And I guess we have a kind of administrative question. If you made an error when you initially submitted your application, let's say you included your total staff instead of just your full-time employees, is there a process for amending that?
So the answer is no. Unfortunately, nothing has been developed to amend it. And the bank has already accepted this as the basis. My recommendation for that individual is to really talk with their banker. Now, good luck, because the bankers are beyond overwhelmed with the amount of work that they have. But I think you should come clean, because this now gets into compliance. I'm going to take this question and run with it a little bit, Aaron. The SBA is going to be reviewing all of the applications. The SBA is going to be reviewing all of the loan forgiveness that the banks are going to put together. It may take them a year. It may take them 2 years. Anybody that misrepresented their position has risk of being charged with, sorry to say it, fraud. So I would want anybody that has a mistake to really start looking at talking with the bank to resolve the mistake, so they don't end up getting hit with any sort of audit findings or get audited and then they have a finding on them. Okay, and I'm going to add a little bit more into this. The SBA has already stated that there's a lot of fraudulent applications that they've received by people who are really not good people, because they're doing fake tax returns, fake applications. They'll take one company and submit for 3 different loans and misrepresent that they have 3 different locations. There's all kinds of unsavory characters out there trying to steal money. And so the SBA has already said they're going to have a task force that's going to be put together to audit this whole process. I just don't think it's going to happen today. It's going to happen after the fact.
Okay. And if you got both, let's say you got both an EIDL grant and a loan through the PPP, is it better to return the grants now, or would it be better to wait until after the?
No, I would not return the grants or do anything with that. At the end of the day, it's going to net itself. The government already planned for the fact that, in theory, people were supposed to get the grant immediately so they can have instant cash in their bank account. And then when they apply for the PPP, it'll be reversed. So I would not go through and return any EIDL grant money. I would just disclose it to my bank, knowing that the bank is going to reduce my loan forgiveness for the exact dollar amount. No big deal. And don't feel guilty about doing that. We were actually encouraging everybody to do the grant and be able to go through and still apply for the PPP.
Okay, and then lastly, a lot of our clients I know have international issues.
Yes.
If you have a U.S. employee, but they're working overseas, are those, is payroll for those employees excluded from any amount you could have forgiven, or is that still available?
The answer is yes. This PPP program, so the Paycheck Protection Program, is really designed for U.S. soil-based employees. Anybody working overseas does not qualify as part of the package. Sorry. Aaron, do you have any other questions?
Some of these I think I can address because we've already spoken about them previously, but I can just kind of summarize. Government contractors, or rather independent contractors that aren't considered employees, are not payroll to them is not includable in payroll costs.
Right, that's not part of payroll cost and is not going to be part of paycheck forgiveness.
But it shouldn't, as long as they're considered, even if they are working on a government contract, as long as they're considered your employees, those employees are considered.
100%. You are we have a lot of government contractors. Government contractors, if you're employing someone to work at the job site, government site, they're W-2 employees that belong to you. Ergo, they're part of the payroll cost.
And anyone who quits between the time when the loan is received and when the end of the 60-day period, that will reduce the number of staff that you have.
Yep. So you got the FTE count, like we said, is important. If your FTE count drops, you will be dealing with a dilution of the loan forgiveness if you do not reconstitute the FTE count. By June 30th is the latest date.
So the pressure is on then to rehire.
I mean, the whole idea is to get people off of unemployment into employed jobs. So bring back your staff, hire a replacement is the way to go.
Okay.
So I have one question I'm going to ask myself. Aaron and I have had a discussion because the SBA, when they came out with the PPP program, expressly stated that it will be a tax-free loan forgiveness when you receive the money, because in IRS rules, if you have a cancellation of debt, it triggers a tax event. So the IRS, in their perspective, came about this in a different way to attack it. And there's a few government officials, unfortunately, that are also supporting this, where there is now an argument to make this a taxable loan forgiveness. So if you've heard from us, or you've heard from your CPA that, hey, this is tax-free, yes, that is true from the SBA's perspective, but now the IRS and the states are trying to get their pound of flesh. And what they're doing is to make this, the cancellation of debt, to be tax-free, because they don't want to step on the SBA's feet, but they're going to make all of these allowable costs, the rent, the utilities, and the payroll costs, to be not tax deductible. So sorry to be the bearer of bad news. If that prevails, you're going to have to pay taxes on the amount that is forgiven, not the way you think, which is income, but actually those deductions will be unallowable. So just wanted to share that with you all. If you need more information, I can give you the names of exactly which congressmen and which senators are cheerleading this particular initiative. But that is something that we're watching and we're hoping does not prevail. But so far, in light of what's going on with the states and the federal government obviously spending so much money, it may end up becoming part of the rules. Okay. Any other questions, Aaron, that popped up?
One very important one. Will we be providing copies of this presentation?
Yes. So for everybody here, Madeline is going to be sending you guys a copy of the entire presentation. We are also recording the presentation, so you will actually be able to view it again, and you get to see us one more time if you'd like. Any other questions, Aaron?
In terms of the $100,000 limit,
Yes.
are employees paid over $100,000 excluded wholesale, or can their salaries be claimed up to the $100,000
Yeah,
cap?
definitely claimed up to $8,333.33 per month, not eliminated. Okay, so it does not disqualify you because you're making more money, but the government's going to cap it.
And then just to reiterate, in terms of payroll taxes that are considered,
So FICA and Medicare employer portion is not part of the payroll cost. We want to make this abundantly clear because this has been something that's been plaguing a lot of people that are doing DIY themselves since the beginning of this entire program. Okay. Any other questions, Aaron?
All right. I think in terms of the others, I can probably address those because they've been either covered in the presentation or they're
okay. Excellent.
Administrative.
Well, I want to thank everybody. Thank you, M&T Bank. Thank you, Greater Reston Chamber of Commerce, Strategic Capital Advisors. Most importantly, thank you for attending this event. I hope we've done this justice. And if you have any further questions, by all means, our contact information is here. And you will get a copy of this presentation. It will be emailed to you shortly today. And we wish you all the best during this pandemic. And we'll talk to you soon. Have a great day.